Thanks so much for tuning into this conversation. The news is now known for over last 20 minutes. It's taken some time to digest, but the comments are far-reaching. The, the special committee constituted by the court for investigating the allegations on the Hindenburg note around the Adani Group. They've submitted the report. It says multiple things, of course, but to just quickly highlight one or two or three things before we get in guests to try and understand their view. So on short selling on Adani stocks and undue profiting by some entities confirmed by the committee, well, the SEBI's found out that some entities have taken short position maybe to the Hindenburg report and profited, but no price manipulation by the Adani Group found. This is as per para number 42 of that report. No coherent pattern of abusive trading came to light. No violation found on the MPS compliances. The committee is of the view that there is no finding of regulatory failure regarding the MPS. The committee has clearly stated that the regulator has not been able to prove that its suspicion can be translated to a firm case of prosecuting an allegation of violation. Adani has taken necessary steps to comfort the retail investors is one more finding from the committee as well. And parties have affirmed on oath that FPI investments are not funded by the Adani Group as well. So multiple things that have come out. Let's get in Pankaj Murarka. He's an ace equity investor, looks at the markets at large, may or may not have investments in the Adani Group, but that doesn't matter in a scenario like this because this is more about the whole episode that happened and had the impact on markets as well. Pankaj, great having you. Thanks for joining in. You may not have had the chance to read everything, but you probably would have heard some of the things that I say. Your initial thoughts on what has come out and how this, if at all, kind of gives comfort to investors per se.
Sure, thanks for having me. I think two or three things really coming out of it. One thing that was concerning everyone was, has there been any manipulation of stocks in that sense by the promoter group or by that? So the statement that they have not found any evidence of any stock price manipulation or by any vested entity having a vested interest, I think to a great extent that's very comforting to that extent, because you understand at the end of the day, if you really ask me as a investor in the market, what really concerns me is the integrity and sanctity of the marketplace. That stock price should not be manipulated. Markets are even for us, and obviously there was always a related question mark was about people making money out of it by having a pre-notion in that sense and trying to short stocks ahead of it. While Hindenburg himself, they made a statement that they have short positions. To that extent, if you really ask me, I personally am not very much against short sellers, because I think they have a role to play in terms of market making. As long as people are transparent and making disclosures, and at the end of the day, short sellers are risking their own money as well. As long as there is a market manipulation, and no one is making undue profits through any sort of manipulation on either side of the trade, I think that's fair game when it comes to stock market, because stock prices will go up or down and people will make money, and there will be points of time where stock market's behavior in short term could be irrational. That's the name of the game, which is where you make extraordinary profits or extraordinary losses. But what is most important, if you really ask me, is the integrity and sanctity of the marketplace. And the very fact that the report says that they haven't found any instance of any such thing, to my mind, if you really ask me as an investor, that comforts me.
Yeah, a couple of other points. Since the Hindenburg report spoke about the ultimate beneficiaries, so on and so forth. So the report, one of the key or some key takeaways seem to be that the Adani Group has disclosed all the beneficial owners, and SEBI hasn't raised any issue with Adani's declaration of the beneficial owners as well. Is this a comforting thing as well? Maybe there is some more details that will emerge once SEBI submits its own report on the 14th of August or later. But is this comforting as well, Pankaj?
Yeah, so in a way, what it really says is, as far as Adani Group is concerned, they've made all their disclosures and data that they had, they've submitted it to the regulator, and to that extent, they've fully cooperated with the regulator in terms of whatever they could for helping or assisting this whole process of investigation. in that sense. Having said that, Neeraj, in my own experience of investing over 25 years, and I've worked with Merrill Lynch, and I've seen how this business works from a global perspective as well. Tracing and going back to the original owners or beneficial owners of a lot of these FI entities or foreign entities is a very complex process.
Right.
And I must say that regulators, the way laws are carved out, have their own limitations, because beyond a point to get to the ultimate benefit, because a lot of this money and meaning I'm saying this is how the world of finance works globally. A lot of this money at times comes to multiple structures through multiple jurisdictions. And a lot of these jurisdictions might not eventually share all the data or information because they're governed by the local laws. So, to get to the original or ultimate beneficiary in many such cases is not always possible, given the complexity of structures and regulations across geographies. And then I'm saying it's not always that there's something fishy or wrong about it, because let's, for example, I know a lot of global investors, a lot of meaning we work with a handful of foreign investors. There are a couple of endowments or many endowments. They don't want to disclose their identity, and which is why they work through structure where their identity is not disclosed.
Makes sense. Yeah, sure. And completely understandable. Now, the thing is, there is one observation, if you will, in the note, and you and I kind of have seen it over the last 3-4 months, that while there was an initial set of extreme volatility in the group stocks and maybe at the broader end of the spectrum, the market per se have stabilized over the last 4 months, Pankaj, with all that's happened. And the report says that the Adani stocks have also stabilized at a new price discovery without destabilizing Indian markets. So, in some fashion, the larger issue around what instances like these could do to capital markets, part one, and two, do they really, quote unquote, take down the capital markets as a result of these, are now found to be wanting, right, Pankaj? Because over the last 12 months, we've also seen significant FI outflows, and the Indian market showing the depth to almost every investor across the world, that no matter how large the FI outflows was, it was not damaging over a long term. This also kind of shows that stability and depth in the Indian markets.
I think that's very critical, and that's a very relevant and very important point. The point here is that India is now the 4th largest market cap in the world. So we are not a small market anymore. Adani Group, given their total market cap and exposure with all their group companies taken together, is significantly large. But more important, the bigger message to investors across the world is that India is a very large market with significant amount of debt, and which effectively gives them a message that, one, it's a stable market because it's a very broad-based economy. It's a very large economy. We are now the 4th largest economy in the world, or thereabouts. We are 5th largest and probably will become 4th largest by the end of this year. And more importantly, it reinstates and restores investors' confidence that any stock price volatility or any event related to one company or one group of companies will not have any cascading impact on overall markets or Indian economy, because it's a very broad-based economy, and these are markets with debt. What investors, long-term investors, foreign investors, when they invest money, what they want is they should be able to take their money out when they want to, and which is where the depth and liquidity of the market matters. And I think in that sense, Indian markets have demonstrated that, despite Adani Group stocks did have a sharp fall, but it did not destabilize or did not have a cascading impact on markets overall. And investors could take their money out as and when they wanted in that sense. And markets were fully functional at all points of time. So I think that's very important. And meaning, unless that is there, foreigners will not commit large amount of capital to that market. So meaning there are a lot of smaller markets across the world, let's say Vietnam or the Philippines. These are called fringe markets from a foreigner's perspective, because they know that they can only invest limited amount of capital in these kind of markets, and they cannot take their money out beyond a certain amount, because these markets are very, very small.
Pankaj, an important question, and you may or may not be an investor. And by the way, we have a standard disclosure. Adani Enterprises, through its subsidiary Adani Media Ventures, owns 49% stake in Quintillion Business Media, which is the owner of BQ Prime, which is the platform on which we are watching this show. Now, Pankaj, just trying to understand from the bent of the news flow around the group after the Hindenburg allegations came forth and the price damage that happened, they have come out with Q4 numbers, which largely seem to be in line with what the fundamental estimates would have been, part one. They have gotten a large capital infusion in select entities from GQG, no less, and they have shown the intent, at least, to raise further funds. I'm presuming that the group would have thought through before making these announcements around further fundraising as well. Now we have this report in a sense giving a clean chit on multiple counts as of now. Do you reckon that people might find comfort on the group's listed equities as well as a result of the sequence of events that I just described?
So let me put it this way. I think one, when the Hindenburg report came out, it made certain allegations that everything is hunky-dory and there's a lot of group companies are sham. I think that was not the case, because there are businesses on the ground, and across Adani Group, they own businesses which have solid assets on the ground. Adani Ports, given the dominance they have in the sector, is a very dominant port operator in India, and given India's rising growth and increasing exim rate, they have a very strategic assets in place. So one, clearly, I don't think so that was the case in that sense, that it was any sort of sham company or any of those things in that sense, one. Secondly, there were concerns around significant leverage in the group. So I think to that extent, over the last 3 or 4 months post the saga, at least the group has taken significant steps in terms of deleveraging, where they've repaid debts. I think there's been a pivot in their whole thought process and strategy, where they want to moderate their debt levels and calibrate their growth while being more measured in terms of this thing. And there's been a far more communication with investors, where investors have started understanding the group, their thought process, their strategy much better in that sense. And the group has been far more forthcoming in sharing data, information, and strategy.
Yeah.
So I think to that extent, that has reduced the information asymmetry, if I may say so,
Sure.
to that extent.
No, Pankaj, please express your words freely. It doesn't, I mean, we may be a part of the Adani Group. That doesn't mean that we don't call a spade a spade. We don't talk about equities the way they should be spoken about.
The point I'm saying is, it could have been a case that some of the stock prices could have been overvalued. And stock prices, it's in the very nature of stock markets, because when stocks trade on stock exchanges, they do not always trade at fair value. Stocks will be overvalued and undervalued at different points of time. And apart from fundamentals, all of us know that in the short term, stock markets are driven by emotions and frenzy, and human mind or human beings are irrational decision makers. So it could have been the case that some of these stocks were overvalued in that sense, and some smart cookie like a Hindenburg saw that these are overvalued, and he tried to catch on that and issued a report around that, which is absolutely fine. And eventually stock prices will find their fundamental value, because that's the nature of the markets. Meaning you have stock prices falling all the time. I don't think so that's a matter of serious concern. Meaning, I'm just saying, Infosys stock price is down by about 40% from its high in January 22. Companies which are generating cash and high quality businesses which are very cash rich, their stocks can also fall 40-50%.
Most certainly.
That's the nature of the markets. And obviously, stock price, like a pendulum, keeps swinging between undervaluation and overvaluation, because what is fair value itself is a matter of subject and debate. And because there are buyers and sellers on every tick, every price, on every day, that is what makes markets. And different investors come to stock markets with different perspective, objective, and time horizon. The investors who come to stock markets with a one-day time horizon, where they want to just make money in single day, and the investors who come into time horizon with 10 years. So someone like, let's say, when this whole GQG came and invested close to about, I think, $2 billion across group companies, and GQG being the kind of long-term investors they are, that was a great endorsement from a very long-term investor who's going to take a 5-year, 10-year view on businesses, and coming and buying into these stock prices where they think and they thought that the stock prices are significantly undervalued in relation to what the valuation of those assets are. So I'm saying that is what makes markets in that sense. As long as as I said, the sanctity and integrity of the marketplace is maintained. Stock price going up and down, that's everyday business for people into stock markets. Now, whether there are people who are trading, there are people who are leveraged, there are people who are investing, and there are all sorts of players. And that is what makes markets. To some extent, I think the concerns on leverage on the book have been comforted. And I think the whole allegation, as it was initially made, that the book is all a sham and all that, I think there was no merit in that because the group owns at least hard assets on the ground and they've been building assets. The question was always on what is the fair value of those assets.
Got it. Pankaj, really appreciate you taking this time out. At such a short span, I understand we hardly gave you time, but thank you for analyzing what your thoughts were on the report so quickly and giving it to us. Much appreciate your time.
Thank you, Neeraj.
All right. That was the view from Pankaj Murarka of Renaissance Investment Managers. Just keep in mind, viewers, the sequence of events is interesting in the fact, the question that I asked Pankaj Murarka. So the skeptic would argue that the SEBI report is still to come out on the 14th of August. They will come out with the note. But the committee, the expert committee formed, has given the takeaways. And as of now, the things that they've spoken about, beneficial ownership, saying that the Adani Group has disclosed all the beneficial owners, retail shareholding of Adani has gone up after the Hindenburg note, no prima facie violation of existing rules or laws found. And of course, the report draws caveat due to the ongoing SEBI probe, which is standard and par for the course, I would reckon, and it's a good thing to have. And the report leads to SEBI to decide about if the pending discovery of 13 entities, whether further cases to be made or no. As of now, they said they're happy with the disclosures made by the group with regards to all of those processes as well. But just keep in mind the sequence of events, that there is a high quality investor that has come into the group after that, taking advantage of the price destruction that has happened into some of these names. It'll be interesting to see how the group's fortunes move over the course of the next few weeks on the markets, next few weeks, months, days on the markets, in light of what has just happened and some of the ongoing events. We will, of course, keep up with some of the other conversations as well. But for now, on this piece, thank you so much for tuning in.